when we analyze sectors, stocks that get impacted by regulation one way or another, one of the things that we look at in the framework that through which we analyze is to what extent can the regulation come and impact or take a share of the profits that the company generates over time, and that is usually reflected in the valuation multiple that the stocks or the sectors get depending on the regulation impact and whatnot. So I would say when events like these happen, it's a wake up call when, as we value these companies, that the valuation multiples need to kind of factor in the fact that the government, or for that matter the regulator, might come in and take some demand some share of the profits which may not flow to minority shareholders. So I think that's the investment implication, if you ask me, from a medium to long term standpoint. Coming to near term, I can see what the government is trying to do here, which is basically even out the supernormal profits that some of these companies are making, and ultimately, in some shape or form, kind of either pass it on to consumer or shore up your own resources, which can be used for multiple purposes. But what it does is, of course, kind of the realignment of the profits ultimately impacts the minority shareholders of the stocks of the companies that they're invested in. And I think that is where it was negative when it came around, and now when it has been taken off, the stock has reacted. I think all in all, it kind of goes on to my earlier point that it when I look at, and when we look at these sectors or stocks, we build in the valuation multiples a certain room for volatility in
Hmm.
earnings driven by the regulation.
Hmm. Trideep, just one follow up there. The so if there is a belief that oil might be stronger for longer in the current decade because of the supply issues, and we all know that PSUs anyways get impacted quite significantly by policy moves, and that's the nature of the beast. This time around, a private entity too is out there. My question, therefore, is: do you reckon that the average multiples for both the PSUs and the privates, which may get impacted as a result of policy moves that could come in because of presumably a higher crude, would start reflecting into their multiples throughout? I mean, not just the PSU space, but even the private names?
If public sector names, for sure, I was going to say that if not already.
If not
So
already, yeah, true.
at least when we look at the intrinsic values of particularly the public sector names and stuff like that, we build in a bit of policy uncertainty, a bit of government, the impact of government policy decisions impacting them in the valuation multiples that we deal with. Private sector would be a more secondary impact. But that if that were to, I mean, so far, quite frankly, government has been more as an enabler and hasn't
Agreed.
really kind of too much of sanctions or too much of issues with the private sector. I hope it keeps that way, and that's why the valuation multiples have generally, for Indian companies, been on the higher side as opposed to some of our emerging market brothers. And I think
True.
as long as it remains that way, we are optimistic that the private sector is still reasonably investable. In other words, what I mean is, you sort of the output is a function of what the company puts in, rather than somebody else taking some share of the profits.
Sure. No, and to be fair, there is a very strong train of thought which says that some of the moves that have been taken are probably much necessary in an environment like this.
Exactly.
So, I mean, completely on ball with that. Just one final question on this before we move to the larger piece. Um, so, you know, the question around other commodities also comes into play. Is that at a point of time when crude prices have come off and the windfall taxes have been taken off, could the same happen to some other pockets as well? Because the commodity complex by and large has come down. So can we anticipate some moves like these? And therefore, is there value there? Because the balance sheets of some of the metal companies are much more deleveraged than what they've always been. They've not been in reckless capacity expansion, and earnings might be okay.
So I think when this is a far broader question than just the windfall tax, to take a view on the metal companies and whatnot. And I would say that if you look at the last 6-9 months of the volatility, the upward movement in the commodity prices, that has been at least partly driven by the supply chain shortages and various different measures that different governments have taken in the individual economies, like China economy being closed. We have put some tariffs on the imports and stuff like that. So I think, yeah, as we normalize, as China opens up, as our economy opens up, maybe the war situation kind of comes down a little bit over the next 12 to 15 months. I would say that as some of these pressures ease, commodity prices would actually settle lower. Whether they settle as lower as they now or maybe slightly higher from us, from here, is a matter of debate. But it certainly is unlikely to remain as elevated as we saw in the first 2 or 3 months of the year. Um, and I think that we draw comfort from, and that we feel is genuine positive from an asset class, from a equity market standpoint. And we are generally in our portfolios actually underweight metals. We have been underweight metals since better half or in the beginning of this year, and our thinking has been precisely this, that the upward move in the commodity prices has been more driven by supply chain challenges rather than demand.
True.
And as over the next 12 to 15 months, these things normalize, the normalized levels of the metal prices or commodity prices would actually be lower than where we were. I think, quite frankly, given how the share prices have turned out to be, our stance has been proved on the right side. And given how volatile these markets are, the swings and roundabouts will happen. But on net, I would say that it ain't going back to those high levels.